right. Hello, everyone, and welcome to the stream. I'm pretty excited for today. Obviously, the day before CPI. So there's a lot to discuss throughout today's topic. We'll be covering the S&P 500, everything to do with the stock market, commodities, and, of course, some crypto stuff as well. How's everyone doing for Monday? You feeling good? Let us know in the chat. We'll say a big shout out to some of the people that were early here today. We've got Ice Sweeper Tube, Tez, Stellian, Ramazan, Grenache Girl, Gary, Randomness, William, and Stuart. And of course, we've got Mima and Ted as well. So it's a very interesting session because we know that the market is prepping for a large move. We know the expected moves. So we've got the expected options weekly highs and lows set out here. So if anyone's not familiar with our channel, this is obviously something we do map out for the week. So it kind of gives us some extreme zones. Do remember that markets tend to sit 68% of the time between these zones. Now, there is actually a secondary percentile that pushes the boundaries of that. And that's where I think it's like 95 or 98% of the market will stay between. Now, we can map those, but realistically, they're pretty much extreme levels. Think of them as kind of like extreme pivot zones. So when we can map them and they may line up with key supports or resistances, they're worthwhile paying attention to. What's key is the event risk. After Tuesday, which is where we see the CPI, make sure to have your calendars ready because you'll need calendars. We will know that the event risk will die down. And of course, then we go into more of the traditional week. So if we scroll through here and we move all the way down to the 14th, we have at 8:30 New York time CPI numbers. And although we have other event risks, such as Wednesday core retail sales and Thursday PPI and all of these types of things, it's really the CPI that's going to move the markets the most. Options will devalue the day after. So do remember, even if you believe you're buying options and you're using that for some kind of risk parameter stuff, they will lose a lot of value through that point. So what do we think? I'm going to ask the poll here of the room. In fact, let me load up the live chat here. I'm going to poll you before we get started, and I want to know whether you're bullish or bearish this week. Okay, let's do it. Now, this isn't my opinion. I want to know what the community thinks. You guys out there. Yes, you, the one with the coffee in your hand. Maybe it's tea. I don't know. I think it's coffee. Hopefully it's not black coffee. Is it black coffee? Everyone in America is like, oh my God, what did you just say? I know. Yes, I do prefer the latte, I guess, or something like that. But anyway, here we go. The votes are coming in. Tom has more tabs open than me. I thought that was impossible. Oh, you haven't seen the tabs that I have in other platforms. Yeah, look, you need a lot of RAM, okay? You need a lot of RAM. You need about probably 128 gig of RAM. I actually need to upgrade. I think I need more RAM. So we'll get that vote coming through and we'll find out what everybody thinks. And there's a few people here say, unfortunately, it's black coffee, says Jerome. That's okay. Look, I'm from Melbourne. Okay, Melbourne. There's arrogant coffee drinkers here. I'm telling you, that's the thing. That's the one thing we pride ourselves in here in Melbourne, as my American housemate used to say. All right, let's get into these markets. So SPX extreme zone number 1. We saw some good rejections. We obviously got our NVIDIA rejection, thank goodness, because I was kind of hoping that would happen. We also got some Tesla potential rejections, and we're seeing some rallies here in the session. We'll talk about our thoughts for the session, but I want to talk about extreme zones because, of course, we know where technical gaps are. Now, remember this level. There's a small gap that's been left at 41.63. There's unfilled gaps still at 42.27 and 42.83 approximately. Yes, they'll be off 1 or 2 points, but you get my reading. So if the market, let's say, has a CPI number and it initially goes, they often say the initial reaction, depending on what the news is, but often the initial reaction is the grab of liquidity. So the first move is the wrong move. That's what they often say. Now, traditionally, that's very common. Of course, if it's a clear-cut number and the market can only interpret it one way, then it often just goes back all the way down and it just obviously has that shock reaction. But we do have 2 technical gaps. We've got a technical gap filling kind of underneath is 40.18. We've also got a weekly level that's starting to appear at 39.71. And we have, remember, the SPY options 68% of the time holding around that 396. So I really like the idea that markets, if the market comes out, there are two extreme zones. The first extreme zone is in this extreme zone 1, the supply. If we hit that level, I think interactions with this zone are going to be pivotal for traders to look at. You know, if you're a scalper or a day trader, you're going to want to look at reactions around there. I also believe that around this 39.70, 39.6 zone, there's going to be some strong reactions. So they're the two kind of key areas that I'm marking out. And I'll put more in my daily show about them as we see today's session play out. But today's session will be important because it's setting up for these moves. And that's the big thing here. It's setting up for those moves. If we move over to the US 500, how do we feel about today's session? Well, I've obviously mapped it with this 61.8 pullback. And I kind of like, and I said this on the weekend video, I still like the idea that the market might dump into the open and then potentially rally for the session. I wouldn't mind it at all to be finishing somewhere in this zone ahead of the CPI news. And the reason, usually I go with an extreme. So you want to be at extreme low, maybe down here, or you want to be an extreme high. And traditionally, you'll do that because the market moves to the next direction. I actually feel, and I'm not sure if a lot of you feel like that the market positioned itself to be neutral ahead of this number. So if you talk to a lot of big investors and traders at the moment, they don't really feel incredibly bearish, nor do they feel incredibly bullish. They kind of feel like, we've got to be in, but we don't really like it. Now, there are some investors, of course, Barry and others, that are just going to be like, I'm bearish completely. But we're talking about like people that have to be in the game, they've got to be in the dance, and they've got to make it happen. So they're kind of feeling neutral and they're waiting to see more. See, big investors, they do really want to know what this number gives them. They're not interested in the 1 or 2% move. They're interested in the bigger pie. They want to see what's going to happen in the 15% move or the 20% move that could happen should the market be, let's say, wrong. Now, do you think, and I'm going to put a Twitter poll out there, that inflation's coming in hot or cold? And I want to just see the chat here. What do you guys think? Is it going to come in hotter than expected? I've often, which I won't, I'll hold my choice back here. We'll close this poll. 68% of you are bearish. So we'll close that poll. And what I'll do is I'll actually add a new poll here. And we will see what everybody thinks is the CPI number. And I'm just going to say CPI hot or cold, okay? I know we could go with ranges, but I'm not interested. I want to know if you think it's hot or you think it's cold. So let's get that out there. Hot or cold? There we go. Eric's S says cold due to seasonal adjustment or the adjustment. Yeah, there's some adjustment to be done. So how do we favor this morning? Look, I like some of the action that's happened here in the pre. I actually preferred it as a long before, and I still think that's possible. And it's mostly just prepping for the big eventual, pre-market tomorrow. So we have kind of like what people would say is an inverse head and shoulders here, left shoulder, head, right shoulder. We obviously know that it's broken some structure around there. There's a little bit of potential supply in here, but we've breached some key levels. So I liked it actually in the early Asian session towards the bull side. Now it's rallied more, and there's going to be a gap between that's about 0.2% up. And of course, the US Nasdaq is up 0.51. So I actually would like to see it fall and kind of potentially come into this 40-70 zone, maybe even swing it a little bit. And maybe that's where, I think this is where buyers would commence if they are willing to commence. Somewhere in here would be where the buyers commence. Do I know that's going to happen? Well, no, not in this case. You don't want to be stuck really into CPI with too many long-term opinions. I think I've made a compelling case that there is a lot to hate about this market right now, including all of the calls. So let's just quickly summarize it as fast as we can. So this is the neutral positioning of the big banks. This is the neutral positioning of the money flow that I put in the video on the weekend. So obviously we know they're neutral, or at least they've been buying, but not buying necessarily heavily. We still know that the Fed's balance sheet is declining. Okay. That's obviously not changing anytime soon. We still know that this is the most important thing to understand realistically from bullish or bearish in terms of overall. And we also still know that we're coming into a seasonal period of badness. So around the 15th, 14th, 15th, we start to see the potential decline of the market during February's. Now, this is taken from 1950 to 22. It's just data. Sure, it's just data, but it's still another potential negative. So we've got neutral kind of positioning. We have some things that maybe aren't starting to be priced in. Forward EPS turning negative for the first time, not the best. We've also got this, which is, of course, our bond BBB rated junk versus 90-day treasury yields, not the best. You don't really like that. We've got a Fed that will eventually hit terminal rate. Even if we go up, it's traditionally not the best when it starts to flatline to down. So, of course, they don't cut out of the goodness of their heart. So we've got to remember that and keep that in mind, even if the market goes up. We also know that kangaroos tend to be present. Lots of Australian kangaroos tend to be present in markets before the first kind of cut, as long as inverted happens. So again, not looking positive for the longer term. These are just the facts. These are what we've seen before. And then on top of that, we've also gone defensive on the Friday session. So this is one of the first and the kind of 5-day defensive move by the markets. Defensives were some of the best performing of last week. And this is what we do know leading into the CPI. So with that in mind, I rather it rallies into the CPI to suck further liquidity in. If you're bearish or feeling bearish, that's what you rather. Now, over on Twitter, if we go over here, and it doesn't seem to load. Let's try that again. Oh. Well, it's broken. Okay, over on Twitter, it's broken. But other than it being broken over on Twitter, we can't. We did share some stuff that was pretty big, and what I mean by pretty big is it was about the calls, and of course, what we've seen is retail calls getting pretty large, and they were certainly on the move there. The man has 3,300 tabs open. You've got to have a lot of tabs open. What the hell just happened then? Okay, there we go. So that's why I have so many tabs open. So if we scroll down here, we've got the net call, mega cap growth and tech stocks. Okay. So this is very interesting because this is the most amount of calls we've seen in mega caps since April. And it's not quite the crescendo we got before the crash that led into the 22 period. However, it's still very high. So it clearly is sucking some people in. Then we scroll down and we do have the other evidence of retail herd getting wild on some stocks. Obviously, all the favorites. Elon's not allowed to block me right now, please, because I'm showcasing the Tesla trade. So here's the Tesla. And we know that this is wild. Can you see this? This is like 5 times bigger trade than anything else that retail can touch in terms of size. So the flow, no wonder Tesla blew that high that I was talking about last week. No wonder it did it. Look at it. So massive. Net retail purchases were out of control. And then it gets even more wild when we think, what is this? Who came up with this? Who did this survey? 37.5% of people were bullish. Down 34.6% bearish to 25. What? Who came up with this? 1 year high bullish readings? Damn, dude. That's some random stuff. That's the type of thing that you don't really want to see if you're a bull. You don't want everyone going bullish. You might say, but Tom, that's historical average of bulls. Yeah, but it smashes the 1 year highest bull rating that we had, which was the 16th of the 11th. So let's have a look here. November 16th. Let's go and have a look at the November 16th in the markets, okay? Shall we? Have a look at the November 16th. Where were we in November 16th? Here. So we were here. Well, okay. What happened after that? Got a little false break here due to news, and we went down. So obviously they're reading it from a 6 months perspective. I'm not hating on the survey that much, but I am saying that when you get hot survey reads, it tends to go the other way. Who does the polls? Those polls are basically some of the biggest investors in, like, I guess, an AAII kind of area. But when I do tend to use these polls as kind of contrarian. And the reason is because they're looking at a 6 month outlook, and obviously a lot of them are paying attention to the news. Alex says, channel stuffing madness. All you got to do is watch option volumes these days. Nothing else matters since most smart money is out of the market. Well, yeah, I'm not saying that we don't want to be looking at the options, but I'm showing you options, bro. We're looking at the options. I'm showing that retail traders are buying lots and lots of options. In fact, I've got it tagged up here as probably the biggest warning sign you can look at, which is exchange traded call option buys at opens, minus sells at opens for customers with less than 10 contracts for options on individual equities. August of 22, February of 23. What happened in August? Bad things. What happens in February? Potentially bad things if CPI comes in bad. Diamond Eye says ChatGPT is Microsoft moat. ChatGPT is pretty interesting. I think it's the beginning of the probably the end for many jobs. Yeah, it's pretty powerful. I'll say that. So I like the idea, and I think a lot of us do. And we'll see what the poll is. Let's see what you guys think. 67% of people come in hot. So we're going to end the poll there. 68% hot. Wacka says Chat GPT is trash. Oh, I don't know if it's trash, man. I think it's pretty powerful. It's not weak. When the fact that you can actually tell it parameters and it does a pretty good job of outputting, I wouldn't say it's trash. Chart Junkie says Chat GPT has been hacked. I wouldn't be surprised at all. The problem with it at the moment, look, I think it's amazing. It's obviously fledgling. And you've got to think of AI as look, who here actually thinks AI is not the future? And I might as well poll it. You want to see the poll? I mean, doesn't mean I like it. All right, let's see. I think, here you go. You can vote on it to decide whether I believe AI is the thing here. ChatGPT is woke. Yeah, I saw that. I saw some comments about that. I'm not here to debate that stuff. I'm here to debate whether ChatGPT or any of these things. Look, firstly, does it mean that you should go buy Microsoft? No. Does it mean you should go buy AI technology software? Not in my opinion, because it doesn't instantly access his money. Does it justify Google going short? Ooh, maybe. It certainly will affect Google's money in the future. And Google suck sometimes. I'm on Google's platform. Sometimes Google, sorry. But sometimes they suck at innovating new ideas. I should have said is AI Skynet, probably. Sam Morgan said you should have already had Microsoft in the account. Hey, it's my favorite stock. Love the Microsofts. The moat, guys. The big moat. All right, we'll go through some stocks. We're just talking about random stuff now. Yes, it's the future, but it's the BS, according to Daniel, because it just aggregates information from the same sources that have been proven to. Oh, okay. Well, I'm going to censor you, Daniel. Yeah. So okay, I get you. The issue is what is true and what is false. Yeah, when you put those in. Anyway, we're not here to talk about AI all day. Let's get into some charts. Let's begin with the dollar. We've obviously gone through the S&P. Now, I've got those two extreme levels. So remember those zones from the SPX. We've got the gap fill sitting at 41.67, and then we've got that level down in that 396, 397. I like it down there, and I like it up there. Like they're the two levels. For today, yeah, I mean, if we're talking what I would like to see, probably initial sells followed by some rallies, something in here that I want to see some action. Where's some action? I would like to see action in that zone. Potential technical action. Okay, potential. Welcome to the 1,100 people here. If you do like the streams, even though it's getting a little bit random today, then make sure to give it a smash the thumbs up or anything, interact, chat, whatever you need to say. Help us out. It always is good. Click the buttons, whatever you want to do. So let's look at DXY. So first up, DXY is clearly angling towards bullish. Now, why is it angling towards bullish? Well, the first thing is we know that we took the low. And when we took the low, we saw a huge rejection. So basically, it's a false break. Now, the false break became a strong weekly candle, which is a great sign. It almost closed on its high, another strong sign. So that's a strong sign. Now, we find ourselves at this 61.8 reversal and some supply and some issues around there. So we're at a critical level. If we breach, where's the next logical zone? Well, you'd have to think it's about 105, like 25, something in here. Okay, 105.25. If we fail because CPI comes in the wrong way for it, I believe we move down to 101.72. Now, if we get down to that level, depends on the CPI number, of course, but I think that they're the critical zones to be looking at. And I expect fairly large moves. Obviously, the market has predicted that, not me. It's not my expectation. I just know that we have the largest bit of news coming up for the month, and it's CPI. Every time it's CPI. Until proven otherwise, CPI is the only bit of data that seems to matter in this market at the moment. Microsoft's moat is the industry standard. Microsoft's moat is the industry standard. They own like everything and they buy everything, and they're very, very skilled at acquisition. They seem to be pretty good at like sniffing out like a new industry, and they're like, hey, what's going on? What's happening over there? Hey, buy them all, and then crash them all. They've been pretty good at it. That like you can't deny that Microsoft's good acquisition. So people believe AI is the future. 84%. 84%. All right, there we go. That wasn't a question of which AI do you think is the future. It is AI the future. Jeremy says ChatGPT is just, wow, this has got people getting psycho. ChatGPT is just a tiny part of what's out there at the moment. Yes, it's just part of it. Obviously, it's something that we can access and see and those types of things. But there is some, look, you want to be serious? Like, come on. AI is going to get wild in like 20 years, 10 years, maybe even 15. I hope that it's a little bit slower because it would be better, but it is getting wild and it'll continue to be. All right, dollar index, critical levels. Okay, because that's what we're doing. Leading into news, you have to find your critical zones every time. That's what you've got to do. Where are your critical zones? Where are you going to be looking for reactions? When the market comes out with wild results, what are you going to do? Oh, it goes up and you just buy? Well, I see it going up. I'm going to buy and jump on board. Well, that's gambling, guys. What's your target? Do you have a target? How many people in the chat have done this? News comes out, market goes off in a direction, and they just press the direction. What was your plan? Jan Christensen says CPI. Yeah, inflation, Jan. Eric S says me. Martin says me. Alex says me. Miles says no. Come on, Miles. I'll put my hand up. I did this. Remember, 2008, 2007, I came in. I saw the beginning of psycho monetary policy. So don't you worry. I like to straddle it. I was smarter than all of you. Instead of going one direction, why not take both? But I'm here to tell you a lesson, okay, for this CPI number. Don't straddle the news. It will kick your ass. Do you want to know what happened? So I'm sitting there with my little account. Back then, it's a good time. I'm thinking, how good's this? I'm going to make so much money. I think it was, I can't remember, some monetary policy or interest rate decision. Anyway, basically, I think, okay, I got to buy and I got to sell. And the price is here. I'm ready. If it goes off in one direction, I'm going to make lots of money. If it goes off the other direction, I'm going to make lots of money. But instead, this is what happened. The whole platform froze. My account went positive. And then this happened and I died and everything exploded. So that's exactly what happens when you straddle news. You do not want to do it. Markets get widened. So the price didn't even necessarily hit my lows or my highs. It just widened the spread and took both ends and exploded the account. So obviously it wasn't very much. And I had like this little system where I'd put like a little bit in there and do it. This was a long time ago. But my point is that a lot of people start with that type of stuff. You need a plan. You need a plan. See, David says the thing here says, even if CPI goes up, it comes in hot, the markets will still go up. See, that's the thing. You don't even know how to interpret the news necessarily. I don't disagree with David. We've seen hot CPI when markets are falling and it still went up. I think, though, that we're at an extreme zone where if you had hot CPI, it most likely will go down. It may rally initially and then go down. That's possible, but yeah, it would go down. So you've got to have a plan when you put in these trades. Let's say you break through this. Where's your stop loss going to be? Are you going to aim for this? Are you just going to aim for a quick scalp? Do you know when to get out? I only say this because I've talked to some people recently that have been trapped in markets, and I just feel like it's a little bit scary. So dollar index, they're your critical zones. Let's move over to the golds. So where are we right now? Well, I think most people would see this as a flag. Most people would see this as a sell. I think we're coming into a critical zone here for it in the early morning session where, if it's really going to go short, it needs to kind of push it now, like very, very soon into maybe the open. I have seen some little signs of possible shifts towards the bullish end, even though it's here. But at this stage, I'm neutral on this. The market, if you're bearish, has no signs of strong bull yet. You'd have to actually see the market breach this level. That hasn't happened. So at this stage, you've got a flaggish kind of trade with a long pole that's hovering underneath, getting ready for either a breakout down to this red level, 1800-ish, or if it's going to go to the bull side, probably 1920, 1930. And the reaction here will be very interesting. So at the moment, I'm thinking gold short, but gold, I'll say this, it will hate the yield. So what you're going to need to look at is the yield more than anything else. If yield starts skyrocketing, gold will hate it. Hate it, hate it, hate it. So 2 years up, 10 years up, gold doesn't like that. That's traditionally the way it works. Witty FX says 3D printer never caught really. ChatGPT, AI, art, AI voice, all this going to be crazy. I'm making text-to-speech vids in my voice, and it's scary accurate. Yeah, 3D printing didn't work. Yeah, look, there's been a lot of crazes over the years. Shanghai boom. When Shanghai market went wild and the Chinese market went wild, that's a boom. Big bubble. We've obviously seen bubble and hyper stocks. We've seen marijuana stocks. We've seen 3D printing stocks, lithium stocks, AI recently. You've got to look past it and actually ask yourself, are you going to be able to drop that stock before it gets dumped on? I'm not talking about a Microsoft or a Tesla or even a Google or any of these things. But, there's a lot of weird AI stocks that people have been buying. History says you get owned every time. Ryan says, has anyone asked it when the market will crash? Yeah, remember, it's February 15th, which I think is really funny because it said February 15th. Now, when is February 15th? Well, it's the day after the CPI. I'm already in the future. I'm on the 14th over here. Thank you also the 1,200 people that are joining us here. So gold, we have some extreme levels, and I'll pop the other one in because we have to set up ready for potential moves to these extreme levels. Because what's going to happen is the market will most likely react fairly heavily. It may chop. If it's a clean number, it may even come up to these levels. And then this is where you get those kind of reversals that can occur. So you've got to be very, very careful. And of course, today we're going to find out how it sits leading into tomorrow, leading into the next one. But this is how I think about things. You've got to think, how do I put myself at the least amount of risk possible with the most potential trade? And I always say patience, react, and predict. If you have certain setup methods, you can actually trade news, but you trade the liquidity grab that happens after the news where the market goes towards a direction and then reverses. Now, you need to have that plan set. At the moment, we can't really figure it out because we don't have the Monday setup yet completed. We just don't know that. We only know that on the US 500, I'd like to see the market short off and then rally through. Let's have a look at the US 100. What's the old Nasdaq showing us? So Nasdaq, if we take a look here, it's come up to a critical little bit of supply. So obviously I had this level here pre-market and I've looked at it quite a lot and I got 2 boxes on it for some reason. Can't remember why I have 2, but anyway, yeah, this is a little resistance-y zone. So it makes sense that it might try shorting off this area. But just like, I mean, what you're going to use usually with the Nasdaq is you're going to use the S&P 500. So the S&P 500 kind of rules. The Nasdaq is a trading instrument that can go along with that. Usually do your analysis mostly on the S&P. It's going to be the better one to give you more accuracy. So we saw that low take. We obviously saw rallies. We haven't breached this, which is interesting. I would like to usually breach that zone if I was going to go long, in terms of that's what I'd be looking for if I was just looking at this chart. We hit it and we're starting to sell off. So S&P 500 is probably the better guide for today's session. Gold down equals dollar up, doesn't it? Traditionally, yes, but gold down also can. Look, the reason is simple. If interest rates are going to be cut slower, that means that for longer, US dollars earn more money in the bank. What would you rather own? US dollars that earn more money in the bank, or gold that costs you more money to hold and pays you nothing? Now, I'm not saying that I hate gold, but just think of gold as a currency, guys, instead of what everyone else seems to think of it as. I don't know what people are thinking gold is sometimes. It's the oldest currency. If I was in Egypt back in BC 2500, I want some gold and I'll sell it to those pharaohs and then I'll get them to build me a pyramid. So that's what I need. I need more gold back then. It's the old currency. We need the old currency. But it's better when yields are lower. That is, when yields go down, gold likes it. When yields go up, gold hates it. So that's the way we've got to think about it. Eric says the UFO is weird. Why the government is telling us about this UFO. I don't even know. Look, I don't know. Twitter's been wild with some UFO madness on the weekend. I didn't know what was going on. Didn't know what to believe with all the UFOs. Let's go over here to the Qs. So the Qs hit a critical level, but I want to look at individual stocks more so than the Qs. So not BHP. We don't want to look at BHP. No one cares about you except for me. So we'll go over here to Tesla. So did Tesla just blow off? Interesting argument or question. Now, I want to show you my thoughts on this stock. So firstly, I got to admit something to you. Okay? I thought Tesla would sell here. All right? Now, by the end of the day, obviously I was annoyed by the close. Okay? That's where I thought Tesla would sell. Right there. So the reason I say that is because it shows you instrument selection is key. Let's say you felt Tesla would short there. Price of $202. Do you A, short the stock straight? Do you B, short the futures? Or do you C, use an option to short. It's like that you choose that the price is right. Yeah. So you guys find out which one do you choose? A, B, or C? Chat. Which one? Well, why do you like pyramids? I like the Fibonacci numbers. Hey, I love pyramids. I hope to go and see Egypt and go check out the pyramids. But I was kind of hoping they'd let me in like some secret, like maybe I don't know. Can you go in the Valley of the Kings? I don't think you can go. You probably can't go in there. I'd float in the Valley of the Kings. It'd be awesome. Check out that. C. So some people are saying B. A, no. It's definitely C, guys. When you're trying to counter an absolute beast. This thing is ramping, the volume's out of control. You can actually see on this particular day the mad volume coming in. So to counter that is very difficult. Obviously, yeah, okay, I thought 150 might find some based on options. Then I thought here, and of course this zone, and then of course then I started talking about the extreme. But this extreme level is pretty critical zone for it. You can see that even today in the pre-market, Tesla's not finding much bid. So if the market does go weak for Tesla fan boys and fan girls out there, where is the market going to go? I've done a little bit of thinking about it. And I feel like, firstly, there's a great chance that the gap will fill at some point. There's a big gap there. That means there's a lot of resting orders sitting there. So the resting orders haven't been filled. Now, that doesn't mean they're resting orders that you can see. See, I couldn't believe so many people don't know this. But in the market, do you think that Wall Street sits there and says, hey, guys, I'm going to leave my orders sitting at 155 and 150, and I'm going to let you guys see them. Everybody gets to see our orders. Have you ever seen the disappearing order act when you're looking at level 1, level 2 data, and there's just like all these orders get placed and they just disappear suddenly? I remember it's really prevalent actually in Bitcoin when people just remove the things because they're trying to manipulate it. But yeah, anyway, you see orders coming in. Now, orders don't necessarily sit in the system. They'll sit in a back-end algorithm, and then they'll come in little snippets to not show their hand. Yeah, you don't want to show all of your positions. That would be stupid. So there's like a little algorithm, and it's like sitting there, and then they just inject it and put a little bit in, put a little bit in, put a little bit in. However, they will sit on those levels. So there'll still be a price that they want, or still be a resting position. So when the market comes down, you got to try to fill this ideally. If the market comes down, what's your plan? Where do we see a Tesla turn should the market come bad? Well, you've got to think in here to here is where the structure is. And actually, there's a deep little one in here that I'm thinking is even possible. So we'll see what happens. But yeah, this is going to be the one I think a lot of people are going to see. This will be the sneaky one. Sneaky option. And at the moment, what is that as a candle pattern? Does anyone know? Tammy Jason says, is that yield and gold are directly correlated? They are relatively correlated during certain periods of time. H8 Mark hate person says, large block orders are done outside the level 2 view. That's right. They spoof on the visible platforms to suck into traps. Yeah, you're not wrong. Yeah, that's good. Evening start. Yes. Some funny names coming in here. Then Tom, why do you think an option would be better? The answer is simple. If you're wrong, firstly, that's definitely Evening Star style. So if you're wrong here with the sell and you take an option, let's say you have a 2-week option, you're giving it, your real issue is time and degradation of time, effectively, because that costs you, yeah? Degradation of all sorts of things with the Greeks and time. So if you take an option short, let's say your aim was to get it short, I don't know, to $185. Let's say you added a spread there. Okay, spread short. That gives you 2 weeks. You don't get stopped because it goes up here. You have no real stop loss. Your stop loss is time. So it allows you to ride through some hectic stuff. And I think for a lot of retail traders or a lot of us, it's very important because this is psychological warfare. That is what the market is, in my opinion, is psychological warfare. We are in a period in markets where they will push your most extreme fears and extreme greeds. And Tesla is the full embodiment of that recently. I saw someone posted in our Discord room. I'm not going to say who it is, but they posted this thing and it was really sad. It was like somebody like losing their mind as Tesla went down. Near the low, this is actually what happened. It was like, I'm buying more Tesla. I'm starting to feel a little bit scared about Tesla. I think I ruined my dad's account on Tesla. Tesla's worth $60. I don't know. I think it's going to $60, but I want to buy more, but I'm not sure. But I think it's $60. It was like literally watching someone go into despair. So unfortunately, you've got despair. And then you've got, obviously extreme greed. So we have both markets very quickly together, and volume has come through massively through these. So these are the levels that we need to pay attention to these extremes. We need to think about this logically. And if we are in a bull market, let's say a new bull market, which is not proven either way at this stage, then this fluff should be taken off. And theoretically, somewhere in here, ideally, you should be able to see potential opportunity. Should you be a bullish person? Should you be? But for a day trader at the moment, looking at this ahead of the CPI, it still looks pretty damn bad. H8 says psychological warfare spot on. You're playing against the AI. Pretty much. Yeah. AI and a bunch of, pretty big money flow, but mostly AI. Boss with the dollar sign says new bull market. Everybody on CNBC says it, so it is true. Okay. I know you're joking, but so that's the Tesla looks like this. And look, again, how we even thought this was a high that was trappy is the consistency of retail stocks topping off at levels that we talked about. I don't know why my level's gone, but basically I had a level here. So we saw markets topping and hitting criticals. We saw Apple hit a critical a few days forward. The thing that made it so weird or so tough was so many markets were hitting critical levels, but they were hitting it over different days. So you had like Tesla hitting and you had Nvidia hitting, but a few days. Whoa, am I lagging or something? What the hell just happened? I think it's all my tabs. Let me close some tabs. Too many tabs, guys. So many tabs. Jeez, so many tabs. Yeah, I probably came in today a little bit too prepared with tabs. Okay, so Nvidia, Amazon. Interesting chart on Amazon. Obviously, it was hitting criticals and filling in gaps, but this one got smashed by news. So news pressed it down. Is that the chart that you come in on and you say, oh, yeah, that looks really good? I love that chart. It looks so good. And it looks like a buy. It's a giant wick down on a weekly. It looks pretty bad, frankly. It doesn't look good. Then you go over the Googles, the Bard. It doesn't really fill you with confidence, does it? So I don't look at this type of chart and think, oh, yeah, that looks amazing. You got these equal kind of highs. You got a big rejection that closes near its lows. So again, rallies couldn't shoe, but it doesn't look good. The evidence is looking kind of crappy. SD says alien attack. I saw him. I knew there was a white light outside. I looked out the window. Bam. Should have taken a video clip for you guys. You would have been able to see it. Tom Dub says, Google, that looks amazing. Hey, as an investor, maybe you like it. The only thing you're really terrified with Google is that they're losing their edge. So Druckenmiller, my favorite investor of all time, he says that Google, because he was a big fan of Google too, like me. He believed that Google was getting destroyed by TikTok, which it probably is partially. Then you've got the bar disaster with the chat disaster thing, which will hurt for, potentially in the future. So it's certainly, there's reasons. A big player dumped a lot there. So yeah, I mean, again, another chart that just doesn't look great in the markets. Then we go to my favorite, the old micro dollars. Micro dollars went above my little market high over here and rejected. Still looks pretty good. Some people could claim that's a double bottoming base. But yeah. I mean, this is not exactly like, that's a big wick on the weeklies. So there's a lot of big stocks that, again, setting up pretty negatively this week. The problem is how many people are seeing it. So you guys are 68% bearish. That's pretty high. Why can't you be? But you weren't wrong last week. You were bearish last week, so you were correct. 68% of you, either you're really smart and you're different to the normal retail herd, or the retail herd's starting to turn bearish completely. Either that, I'm not sure. Mr. Retroball, Readable, I so thought this. He says, aliens don't want us to have the AI. I thought that as well. I seriously did. I thought it was so funny. Like you had like the chat GPT kind of go into the max moon and the bards, and then all of a sudden there's all these flying unidentified objects floating around. I thought 100% that means the aliens don't want us to have AI. It's people from the future coming back to tell us something. Permit Fisher says, Yo Tom Co, what's up besides conspiracies? Oh, well, we're talking about markets as well. Why is Tom laughing about aliens and AI? Look, what can I say? Retail was mad bearish 2 weeks ago. They were mad bearish 2 weeks ago, yes. Then they switched, yeah. And we can see that, wow, they weren't really mad bearish. I mean, the options tell you otherwise. The options tell you that a lot of people switched to bullish and are left potentially holding bags at higher prices. Advanced technology is not allowed yet. That's right. We have to go back to Windows 3.1. That's what they're going to do. Windows 3.1. For anyone that doesn't know, isn't old enough to use that, that was the time. Windows 3.1. That thing sucked. I remember Windows 95, the beautiful sound when it came on, and stupid Clippy used to harass me and tell me how to fix things. Let's have a look at some other things that we know are occurring right now. Copper, critical level, looks terrible actually, because we've got that weekly rejection. Now, copper comes off my key zone. I definitely don't like copper here. Of course, we talked about this. This is a deciding factor. Look at the extreme level that copper finds itself at. Big ass trend line, getting on close to it. So again, another market setting up for either a big rally, everything's fine, or a horrible dump to move into that kind of 375 level. So there's so many of these markets that are at criticals. And I'm sorry to tell you, this is the problem with the stupid CPI number and this annoying news. News gives markets, and I'll say this one time, news gives markets excuses to move to the next level of equilibrium. That's what news does. Stop looking at the news and saying, oh, I know how to interpret this. No, you don't. I don't. How do you know? Maybe you're big brain. I don't know. Maybe you're Einstein's second cousin's cousin. However, I doubt that you really have the information at hand to be able to interpret the news correctly and figure out how that is actually pricing in. So instead of thinking about news like that, why don't you start thinking about where's the next level of equilibrium? Where's the next level that the market wishes to move to now that it's been allowed to move there because it's trapped everybody in moving to the next zone? Start thinking about that way. It may help you out. Einstein did marry his cousin? Hey? Let me just verify this fact. I might use ChatGPT. I'm saying obviously it's going to tell me the truth. All right. Einstein marries cousin. Okay, wait a second. Elsa Einstein was the second wife and cousin of Albert Einstein. Their mothers were sisters. Okay, I didn't know that. There you go. You learn something new every day. Ask Clippy. I use Google. I use the old technology. It seemed to say that. Well, you learned something new. I didn't know that information, but thank you very much for sharing it with me. US oil, how's it looking? Well, US oil's enjoyed the last couple of weeks again because yields have been going up. Perpetually wanted oil to go to 65 bucks. I gave up on it, obviously at 77. I gave up. I said no more oil. I believed it was short to 65 and 75, and we got the 75, but I don't like oil. Annoys me at the moment a lot. So a lot of people ask me about this. What do I think? I think it's trapped. I don't think it can get past here, and I don't think because of the government it can get past here. And you can kind of see it's trapped. Price action's trapped. Ultimately, if we have true demand destruction, we should theoretically move to 65 barrel. But when, timing is everything. So if you don't believe you have edge on a market, what I'm saying here is if you don't believe you have edge on a market, leave it for the time being. Come back to it when you believe you have edge. I'm not feeling the edge on oil. I don't know what you think in the chat. What do you all think in the chat? I don't think I have edge on US oil right now. I don't even know what it's going to do. Kevin says oil is in a channel trapped. Now, Kevin says, what about natty gas? Well, natty gas is a little bit different. Natty gas is starting to look a little bit nicer. Has it hit the low? Well, we're starting to see the signs. So here's a selling climax, theoretically, at this stage. Here is an AR rally or something like this. Here's another sell. I'm looking for a low take. I want to see natty gas needs to take a low. So in fact, I'm going to set an alert right now. Oh, that's right. This stupid thing. I forgot I have to refresh it. So we're going to set one for price do we need here? 2358. 2.358. Okay. We're gonna put the little alert in. And what that is doing is it's basically, I don't want to look too much at natural gas, but I'm interested to see if it takes the low and how it reacts to it. Because we're building a case here. We're building evidence that potentially it could be a low. We don't know that, unfortunately. I wish I did. But remember, most of trading, most of investing, most of all these things, guys, it's all about finding your edge and finding your repetition, finding replication effectively. And when you find replication, God, I'm ranting today. When you find replication, then you say, okay, when do I get my edge in the replication? When have I seen this before that I can then use as a statistical evidence edge to do it again and again and again? And something like Wyckoff or something like any system, really, there'll be certain periods in time where you kind of feel like based because you've seen it before. And you might be able to assign that to a 70 to even 80% system. But the hard part is being patient enough to wait for it. And it sucks. And that's why often when you'll talk to really good traders and investors, they'll say it's a little bit boring because it's not actually a super adrenaline. And what they'll tend to do is they'll have two accounts. They'll have their boring account and then they'll have their wild action account. That's the wild action. And that's where they go and they find the next 3D printing stock. Boss says, FX Evolution, you sound like a grumpy grandpa. Well, today maybe I'm a bit grumpy. Look, it's 1:30 in the morning, man. 1:30 in the morning. You know what I do for you guys? I get up I stay up at 1:30 in the morning for the New York Open because I love the stock market, all right? There's only what I said the stock market. I didn't say the Australian stock market. I think it's okay. Australian stock market has good yield. But I'm 1:30 in the morning here for the US market because it's the best market in the world. Let's face it. Let's face it. The best market in the world. Who agrees? Is it the best market in the world? Hell yeah, it is. And I'm not even a US citizen. But damn right. We know it's the best market in the world. And anyone that says it's different doesn't understand economics right now. Now, that doesn't mean it's the best profit in the world all the time. How's the FTSE looking? It's looking like it's near all-time highs. Now let's have a look at the FTSE. We'll load the FTSE up for you. Here we go. See, look at it. Ignore the fact that it's high while the others are down. The FTSE, look, you want to look at the long-term average, everyone that's talking about the FTSE being so great. Oh, God, I don't have enough chart here. 1 second. FTSE, the FTSE has been trash for a very long time. I'll see if Pepper has more chart. I don't even have enough chart here, but let's just say this thing didn't do anything for a long time. You go back 2008, and it's doing nothing. It's just because it's got old economy, sweet ass, like mining stocks and energy and a bunch of financials. That's why it does all right. 10 years of lost decades, not very good. QQQ versus SPY. Make sure to have this chart on this week, guys. Very important levels. Obviously, we're leaning in on if we breach this, we've got to seriously pay attention. If we do end up above 4,200 this week, I will warn you, I believe the markets could approach 4,350 as an extreme high. That's my extreme level number 2. Subscribe if you're interested in EX2. EX2, my new formula. And if we get there, then of course we need to be, that's when you can start to get fandangling with the bears again. But at this stage, yes, I'm leaning bearish. Yes, I've leaned bearish since 4,000. All right, come on. It's 4,095, I understand. But, realistically, there's a lot of signs and most of it's options related. And I think the H8 person before said that. That's the thing. The retail net short percentage on the FTSE is one of the reasons I am strong rally. Mohammed, I'm not doubting you, man. I saw that. It's like 82% or 85% retail short percent. I totally agree. Actually, I might let everyone know. I know we're 2 minutes off the market here opening. Let me just get some retail short statistics for you. As we lean in here, this is the CFD markets. Only one provider. US 500, 57% short. Not too bad. Wall Street, it doesn't matter. FTSE 100, 87% of people are short and have been for a long time. The France 40, 83% of people are short. So FTSE has 87% short, Germany 76% short. So no wonder they're running up. The retail traders are getting owned. 87% short. That's not very smart. So leaning into today again, we will do some crypto in a second. The old stock market has come in here with a little bullish kind of tinge. And I like the idea of a little bullishness into the CPI, pre-CPI day. I still would like to see weakness. Look, remember, if you're left, how are you going to feel if you're left holding bags into the open of tomorrow? And you've got to think about that. What are you going to do? So are you going to be prepared to take that risk, which is the biggest volatility risk that we see in terms of event? Could be a nothing burger, but generally speaking, the market doesn't believe that. So if the market comes down and you feel comfortable, have a plan, have a procedure, do what you feel like doing. But ultimately, you need to be wary of tomorrow's open because it is going to be a risky day. We've got extremes, these 4160, 4180 zone. We've got the extremes on the low, 396 to 398. And we also know, remember this, we also know that the SPY weekly options high and lows are here. So this is ding, ding, ding. We are open. We saw an initial little drop there on the US 2000. All of the stocks are mostly green. Big Microsoft up 1.76. Love the Microsoft. Very good. But in general, not that strong. The two AI plays out. Tesla did recover. It looks like a little bit, but still down 1.54. So we've got a lot of stocks leading into the CPI, mostly kind of negative-ish. We've got the US 100 finding some recovery. I'd like to see it short. Oops, I didn't mean to lose the SPY, but I would like to see it short the morning. Qs going down a little bit. Well, hopefully they go down a little bit more. I'd like to see them at least fill gaps, but I prefer down in these 4070s. So if we go over to the SPX, we closed at 4089, so not very many points off. I just want to load my SPY back up because we got to have the SPY. The most annoying thing about the market the fact that there's ES, S&P 500, 3 different stupid S&P 500s because they just had to make 3 different blends. And then they've got, maybe there's 5 different blends. Then they've got, so you've got SPY, you've got SPX, you've got S&P 500, ES futures. You've got to, and you actually have to trade, like as in that chart, a lot of them to get edge. It's really annoying. I'll say that. Mr. Redabor, $2. Burry hints to Hong Kong stock undervalued chance. What? Redabor, you can tell me more about this. US 2-year yield rising. Yeah, so we see here the US 2-year 0.75, US 10 negative 0.11. So nothing too mad, but obviously the 2-year rising. So if we have a look at the interest rates, I've only got a few here, but it looks like the ones that are ooh. I don't remember September being 5.2 almost. Wow, let's check that out over here. 5.2. I kind of want to keep all those charts on. So yeah, so it looks like the interest rates on September are sitting at almost 5.2 in the market. So yeah, we're getting very close. Look at that. Look at that, getting near the extreme. Again, ahead of the CPI number. So it can either go little or bang. And that's why we're at an extreme. So we have markets neutralized in these mid zones, and we've got extreme action. What did Burry actually? So the markets are open. Obviously, they're doing their thing. There's not too much big moves here. US 2000, interestingly, falling off a little bit. I might load up which sectors are finding the strength. In fact, we could use Tiger Brokers over here, and we could go to US, and we could go to must be blind or something. Why am I blind? Ah, there we go. Heat map. I do like my heat map. And then we can go percentage, and we'll go percentage day. So what have we got coming in hot here? So we've got oil and gas down, banks, a little bit of bullishness in healthcare, and a few others. So that's interesting. System software also up. If we go over to another one that can track us here. We're interested in the today's closures. Like if we see rotations potentially into defensives, it could at least give us a little inkling that maybe if someone has the loose lips and they figure out what's going on, then we could potentially see, you know, some knowledge that maybe we've got a hot CPI coming in. So this is interesting. This is another day where we're seeing staples, utilities, and healthcare in the top echelons. Now, remember, guys, this didn't happen pretty much any day of January. It just didn't happen. It didn't exist. It just didn't exist. Chips are crashing. Crashing. Oh, Tesla down, 191. Can't say I'm sad. Nice little gap there now, potentially opened for the CPI number if it does end up building up. Microsoft finding the only bid because it's the best stock, you know. I better be careful if that thing ever goes bad. I mean, this not very hard to say that I believe in Microsoft. My personal opinion, of course, but yeah, it is interesting. TLT finding a little bit of bull, which is just because the US 10-year is not coming with the US 2-year. So what that's telling you, see, when you have a US 10-year decline here, it's, oh, I don't know why that's not yellow. Here we are. US 10-year decline. It's telling you that the market is starting to see sickness, because remember, the higher spread difference between the 2 and the 10 means the sicker the market. Yes. Go down, Tesla. Stupid. I kind of wanted it to do this. Defensive's up today. That's right. Derek, we don't say that word, bro. Alex says, hi from Australia, Tom. Do you trade any liquidity metrics for US stock markets? What do you mean exactly from that, Alex? Thanks for staying up. No worries. Thank you also to the 1,350 people that are joining us. CRM dumping. Yep. That's right. And we've still look top performing sector of the day, XLP. XLU starting to, it's off to the race. I love watching these things. I don't know why. The little worms running around. Look at them go. Little dancers. You can see those little staples. XLP out in front, XLU coming through the mid. It's like a little horse. It reminds me of Nokia snakes. I think that's what it is. So anyway, XLP's coming through. So look, again, it feeds into that idea that the market is going bearish ahead of this. Why am I hating on Tesla? No, I'm just glad it's going down from here. Look, I own a Tesla, man. I pay for that stupid 1 month subscription in my Tesla. Okay, Raphael, don't worry. I pay for the subscription. I give Elon his dues. I even pay on Twitter. I got the little blue check mark. I mean, I'm giving Elon a lot of cash here. It's all good. Rob C's watching the snakes as well. I own a European Tesla. That's probably even better build quality. Maybe, I don't know. I think the European one's pretty good. What is that you use to watch the sectors? That was Koifin, not sponsored by them or anything. I just think it's pretty cool. How late do you sleep? Yeah, 2:33, something like that. It's not really healthy. I'm just hoping for daylight savings to end soon so we can actually get back to a normal time. But I dedicate ourselves to this. This is, you guys enjoy it. Hopefully you find some value in my rants and talking about the markets and these types of things. I don't know if you do. I guess you do. So yeah, that's what we do. We get here at 1:30 in the morning. We have a look at these markets. But look, it's kind of working out the way we thought at the start, which is we'd like to see some weakness. There's some rotation occurring. Obviously, some of the chip stocks seems to be the ones that are down the most. That's interesting, I guess, but not unexpected. It's got to do with people maybe selling a little bit into event risk. I don't really want markets to get crunched today because that's not really ideal for our potential of markets actually being weak. The other thing that we might want to look at is, obviously, what do we know about the Bitcoin move so far? Well, Bitcoin broke down below my low. So again, I favor and I would prefer that Bitcoin rallies then shorts. And that's kind of my favor for the markets as well. I want to see a rally into a short. And the main reason behind that is because I think that this usually means that it's done good trapping and it has more legs in the short. If it just kind of floats off down really hard, that can mean maximum fear. And if it closes on its lows, of course, you could be excited about bearishness. But in general, you do prefer the trap is set well. You really need to move to the USA? Yeah, tell me about it. I technically do. Cheaper property in the USA, as long as I don't live in Manhattan. Actually, Miami's pretty expensive too. BTC going to 18K. I'd kind of like to see BTC even lower. I mean, if the market really takes a dive, my ideal for BTC still remains 11.5 to 9.5. I know you might think that's insane. You'd be like, whoa. The one thing with BTC is I don't really feel FOMO towards it. And I say this to a lot of people, and just if this helps anyone out there, if you love something, don't trade it. That's the story. That is going to be the thing that I leave everybody here with today. If you love something, don't trade it. I love Microsoft. I don't trade it. I might own it. I don't trade it because I'm biased. Every day is a great day. You know what I'm saying? So it's very difficult to trade things that you love. QQQ just under the 15-minute 50. Gotcha says, well, I hate natural gas, so maybe I buy oil. Yeah. No worries. Shock City Rocker says very true. I got my butt kick on covered calls. Yeah, well, if you're going to put covered calls on, you have to be expected to drop the stock. And I lost two positions that I love. Yeah, and you may have accidentally caused yourself some CGT too. So that's an issue. USD dumping. Yeah, so we saw a little bit of a shift then. We still have pretty strong market in some of the big tech. It could be like based on this. Obviously, we're not seeing Dow super strength. We're seeing Nasdaq strength, but the sectors that are coming through technology, communication. So obviously the big ones, the big tech stocks kind of jumping up, but still. And I'll just show you again just here so you can bring it on the charts. We've still got defensives. So defensives mostly through that top end, and then a bit of tech. So it's a weird day. I mean, you've got defensives and tech, but most likely big tech. All right, guys, look, we'll leave it there. We know some plans in terms of some key levels for this week. I still would rather to see that the stock like the US 500 to short the open, and to move down a little bit for the session, hopefully end in rally. That would be, if it does end up rallying, that's it. Okay, sure be it. You have to be patient with markets and wait for the key levels to be hit for you, so that means that you've been like a praying mantis and you're ready for it. Please be careful out there tomorrow with CPI. It's going to be potentially a pretty big session. Obviously, super exciting. It's why we love the markets. There's always something new. It's the one thing I heard that Sergio Perez in F1, he said that if he wasn't going to be an F1 driver, his second career was going to be stock market trader. So clearly, we're all here for that huge hit. And he's obviously, going 300K an hour or whatever it is, 250 miles or 300 miles an hour is probably a pretty big adrenaline hit, I'm sure. So that's why the markets are so fun. There's always something new out there to learn. We're always expanding ourselves. Today, we learned something about Einstein that we didn't even know before. But mostly, we hopefully learned some stuff about the markets. Remember, don't trade what you love. Instead, try to be non-biased towards your trading. It will make you better as an investor and trader. And in general, we're looking for opportunities. Remember, you don't really care as a trader where price is. You care instead if there's opportunities. If the S&P 500 was 10,000 tomorrow and you missed it, who cares? You're looking for the next opportunity. There's always another one around the corner. And you've seen so many over the last couple of years since most of you have entered into these markets. Thanks so much for subscribing. Thanks so much for smashing the like button. If you enjoy, follow us on the other socials. Help us out over there. It's cool. It's cool for you to do. And of course, I look forward to making an announcement soon about how we're coming to the US later on this year. So obviously in September, I hope to meet a lot of you. All right, catch you for now. Good luck in these markets. We'll come at you for the Monday close with a new video talking about our thoughts into the CPI based on today's reads. Still early in the session. We'll find out what the market's going to do, but I would prefer it's more on the bullish side. And that's just because I think it's better for the storyline should the market actually come in hot. Bye for now and ciao. Chick-fil-A sandwich for Tom. Yes, Chick-fil-A. Somebody hit me up with the cousin or maybe there's a Chick-fil-A owner out there in the community. You never know. Hit me up. Send me a Discord. All right, catch up. Bye.